Ladies and gentlemen, welcome back to the channel. It is a big one tomorrow. Let's just say that. Can I say that without that being clickbait? Going once, going twice? No? Okay. I'll take it. But tomorrow's a big day. Wall Street is freaking out. No other way to put it. Wall Street is tripping. Yo, Jennifer Hendricks in the building. We are live. Futures, I'm not going to use CNBC right now because they're moving around so much, and CNBC only updates their futures every 10 minutes. So we're actually going to look at these, and it says the NASDAQ is up 0.10, S&P 500 is up 0.26%, and the Dow is up about 0.5%. So if I were to imagine tomorrow, you get a lot of that NASDAQ sell-off action, and then maybe the Dow does do decent, even though I believe Texas Instruments oh, they are in the NASDAQ. Okay. Well, yeah, they got destroyed as well in after hours. Their earnings were El Pupio. I can't bear this much longer. Yes, you can, Vlog. Yes, you can. I believe in you, Vlog. Cheese Chaser, what's going on? Let's go, baby. Me too. Yes, apes love popcorn. Yes. Yo, what's good? Dan the Man, Matt Donnelly, Elaine M, Shizzle, I like that. Shizzle 79. What's up, man? Ooga booga. Oogly boogly. I can't bear this much. What's up? What is going on, Bill A? Salvatore Pizza. We're about to hit a hard in recession. Hold on to your money. Fire. Yeah. What's up, bro? Yeah, it's pretty much Econ 101, and this is why I was so early to this whole sell-off. I've known this was gonna happen for quite a while. I was talking about this back in December, and that's really when I turned bearish on Apple. It's like the economy expanded artificially. It will contract artificially, right? If you don't continue to pump funny money into the economy, that's what is expected to happen. And people like assume that just because you printed 25% of GDP that's going to continue to post good earnings at companies, and that's simply not the case. This is pretty basic shit, but even like analysts don't fully realize, and that's where the opportunity comes in for people that are early and people that understand that it's simple Econ 101. Like go back like a month or two, or January. Go back to January and watch CNBC. It's actually hilarious. Piazza. Trump's $10,000 a day fines for contempt start today. Damn, Trump. 10,000 a day? Trump's like, yeah, I don't need that. He's like, I wipe my ass with 10,000 a day. I feel you, bro. That was some news that just came in. How is everyone this evening? We are better because you are here, Edward. Yes, that's true. I'm still up in my personal portfolio. My 401k decided to take a 2.3% dip, but that's fine. That is fine. Yeah, 401k, you probably got a long time. And this drop that we're seeing right now, like, think about it in the context of everything. It's gonna be like one of these, like a 2018, when you look back at it. Like, this is where we are right now. 5-10 years from now, we'll be like this, looking back at what we're seeing right now. Like, damn, that was way back here. So it's good, but definitely some headwinds here in general in 2022. And I guess you could call the shitty part about it is the markets are reacting like this so early. Usually you don't see these kind of sell-offs until you get like deeper into a tightening cycle. Because ultimately you usually don't crash until you're like halfway like towards the end of a tightening cycle, and then you usually see like the full-on crash when the Fed cuts rates. So eventually, as the Fed continues to go along, theoretically, as history shows us, it doesn't get much better, and then once they cut rates, it'll get bad. So I don't know where I put the timeline on it, honestly. Like, maybe we tighten, Fed raises rates throughout 2022, possibly they cut rates like beginning of 2023, kind of where I'm leaning, but and then that's when you could see like the bottom and the fear. I sold Ater today and put some in AMC. There you go. Yeah, Ater was up like 15% when I seen it today. I have some options, but they are clapped. They are clapped in Ater. I didn't get enough time. Good evening, sir. 24 the money. Good evening to you. 2,000 more. Yeah, let's go. Let's go. 2,000 more. I think this is a really good time for AMC. Like, this is what I've been talking about for a very long time now. Like, you need to see these market conditions, because like right now is when you could more or less see like shorts getting margin called and then not having enough capital to service that margin call and getting liquidated on their positions. Like, without money being restricted, without stocks going down, bonds have already taken a hit. Europe is already in the toilet. China's already in the toilet. If you invested in Russia, that's already hit. So basically everywhere has been hit substantially. And I guess we're getting to those levels too, but it's still holding up a little bit. But I don't know, man. Facebook tomorrow, that's gonna be like I don't know, Facebook 2.0. Do you guys think Facebook's gonna crash again? Too much shorting going on. Don't short the like button, gang. Yeah, I agree. You should not short the like button. That's not good. That's not good. They're getting on the bus before they get pushed in front of it. Basically, yeah, basically. And it's like, I don't know if you guys have watched for a while, but a long time ago I was saying with like the China slowdown and basically talking about these economic effects of printing a lot of money and then economy expanding and then contracting. Like, the Fed has no choice. Like, a lot of people think the Fed is going to stop raising rates, and I've heard that a lot from even economists that are saying the Fed is not going to do 8 to 10 rate hikes. But the truth is the Fed has no choice, because when that ultimate recession comes, when unemployment really starts to go up in a very dramatic way, the Fed's only real tools are adding to the balance sheet and cutting rates. And if rates are already at zero, if they had waited even longer to raise rates, then there was nothing else they could do. So they need to get rates back up, so inevitably they can cut them again. Long story short. But when they cut them, that's when the real crash happens. Like, the second the Fed cuts rates, I will probably put 5 to 10% of my portfolio in puts, right? Short positions. Not financial advice, but it's never a good sign when the Fed cuts rates. Starting to feel like we're fighting a losing battle over a year and still no squeeze. Hell, we can't even get this to stay above 20. Is this possible if owned by 90% retail? Well, it's possible, because it's all about like the bid and the ask, right? What somebody is willing to pay for the stock and what somebody is willing to sell the stock for. You could have 99% of a stock owned by one person, but if that one person is not buying or selling their shares and you got 1% of the float that's trading, and say it's split in half, say, right, you own 99%, 1% was trading on the markets. Well, 50% of people wanted to sell it at 100, 50% of that 1%, obviously we're talking about the 1% here, wanted to sell it at 200, right? The price would be 150 because it's the equivalent of where both people are, right? Half of that. But now what if that 50% of 1% wanted to sell it for, let's say, 80, right? The price is going to go down. It doesn't matter who is actually holding it. But then imagine you have like $10 billion of money that comes in that wants to buy the stock. That's where the 99% of holders help out the stock a lot, because then everybody's fighting for a very small portion of the float, and that's where you can drive up the price. But it's all about the velocity of who is trying to sell for cheaper and who is trying to buy for more expensive. You know, if people are trying to just get their hands on as many shares as possible, when the FOMO kicks in, that's how prices go crazy. It's not necessarily that there's more buyers that day than sellers. Like, you could have more sellers on a, level 2 order book than buyers, but the stock could go up 45% in a day, like we've seen with AMC not too long ago. It's because those sellers don't really want to flood out of their positions. They're not rushing to get out. The stock's going up and people are rushing into it. Hopefully that makes some sense. But these are the prime conditions for the MOAS. And it sucks because a lot of people, like other people that make videos, have really not talked about this enough. But it's the main key to seeing the MOAS. You have to see liquidity drying up. Like, I don't think I've ever seen anybody talk about it like this, and it's a shame, because then I get called clickbait and I don't know what I'm talking about and all that, which is fine. I'm here to educate. That's what I love to do. But you're primed to see the MOAS right now, especially the lower we go, the potentially more bullish that we get. Like what's the difference between a margin call and actually getting liquidated? Well, a margin call, all that means is you have an X amount of time to deposit money or collateral into your account to stay in whatever your positions are, whether they're long positions, short positions, options, does not matter. When your portfolio goes down, in a dramatic way, and you don't have collateral, you don't have that much capital left, especially if theoretically AMC made like a 100% move in a day, your odds of being forcefully liquidated and not being able to meet your margin call go up dramatically. When money is free and you could borrow, like, say, let's say State Street had a $10 billion short position or a $100 billion short position on AMC back in June. Well, you could borrow money for 2%. Why would you cover on that short position when you can borrow money for 2% and wait for the stock to come back down? Now you're not getting a loan like that for at least 5 to 10%. Like, you can't even get a 30-year fixed mortgage rate on a house that is appraised at that valuation. 30-year fixed loan, and that's going for 5.5%. You're not getting a margin loan or a loan to put in your stock portfolio right now for less than 5%. Whereas a year ago, that was a different story. The Fed was encouraging people to take risk and provide liquidity. 2008 was way worse than 2018. Oh yeah. 2008 was systemic, so it had like real problems. Like, what happened during 2008 was, I'm sure you guys might already know this, but mortgages failed. Like 12% of people stopped paying their mortgages because nobody really was financially savvy in that way. A lot of people were getting those ninja loans, no income, no job loans. And like we're getting way too many houses. And then they didn't realize that like 2 years down the line, their rates went to adjustable the whole time the Fed was raising rates from that. I mean, that whole time. Look at the federal funds rate. The Fed was raising rates that whole entire time. So this whole time they got locked in with a teaser rate. And then, 2 years in, let's say that happened in 2004, 2005, you got that loan. Come 2007, the adjustable kicked in. And now you're paying with the adjustable rate like 7 to 10%, right? Or more in some cases. I actually know somebody that has never refinanced. They got a loan in 2003. He's actually my uncle and refuses to refinance for whatever reason. But he got the teaser rate, and his rate was like 3% at first for the first 2 years, and then it went up to like 8%, and then it went down during COVID, so he was happy. But it makes your payments go up a lot. Everybody defaulted, but that wasn't the real issue that caused 2008, that caused the recession. That wasn't the problem. 12% of people stopped paying their mortgage. Like, it sucks, but what actually happened was the banks were bundling bad mortgages together, selling them as A+ ratings, and then betting against those mortgages. Like, think of it like using options against a bad asset. The stock fell, or in this case, the bonds, or CDOs is what they call them, collateralized debt obligations, and then everybody lost everything. Like, they were like each CDO, I think it was like 10 to 15 times. Like if the CDO was like $1 billion, there was like 10 to 15 times that amount betting on them. So it was trillions of dollars in issues, and all the banks were doing it. So we don't have that now. It's not like a systemic risk problem. You could say like the hedge fund stuff like that would be like the closest thing to like a systemic problem you could get right now, at least from what I could see. So it's different, but we just went up way too fast off of artificial money, and we're gonna come down, pretty fast too. And then we're probably gonna trade sideways for a long time. Like on the S&P, it would not surprise me to trade in this range, like the 450s to 400 for. Or even the 360, call it 360 and 450 for the next year or two, until earnings either catch up or the Fed cuts rates and we take that initial beating, and then people start to borrow on cheap money again. So it could be a while. It could be a while. So I'm not really like when it comes down to AMC, like we need these conditions to happen, but it's not going to be like we have like a 2-week period for prime conditions. It's going to be like, okay, so maybe now we're prime for the MOS, but over the next couple of months or even the next year, we're going to be prime for the MOS that whole time. So if any catalyst comes that's substantial enough, that pops the stock enough, that could start the domino effect. So it's not like there's a lot of pressure on like this week or next month. It's going to be like this for a while. Like rates are going to continue to go up for quite a while. The movie Margin Call. Yeah. The Big Short goes into a lot more detail on the CDOs and stuff like that. But that's a good one too. The reason why the market is crashing is because the Island Boys did that song on YouTube. I'm an island boy trying to trade, yeah. I'm just an island boy. I got the puss, yeah. I've been seeing some funny videos by the Island Boys. And the only thing I can think of when I see the Island Boys is that they actually made like all their money off of the PPP loans. I'm like, man, y'all scam the government. That's bullshit. Where's mine, government? I had to pay taxes, you motherfuckers. They killed me. Nah, it wasn't too bad actually. And what got me was the real estate transactions. That sucks because when you like sell a house or even buy a house for yourself and get paid a commission on that, like obviously they don't take the money out, so it comes back to get you on taxes, and that's one person you don't want to try to fuck is Uncle Sam, because he will fuck you back. That was very dramatic, but it's true. It's true. Never try to fuck Uncle Sam. And the trading too. I had quite a bit of trades that I had to pay taxes on too. AMC usually sees a 15 to 25% bounce in the 13 to 14 range. It's happened multiple times. Yeah, and believe it or not, I mean, we're still holding up very well. Like, relative to what is happening right now, we are almost at, well, we are at the lows where we have closed a day, right? So we have never closed a day at these prices. Considering after hours we fall all the way to 413, we've hit 409.37 intraday, like beginning of the day, and then we bounce straight back up, right? So we are actually closing at the lowest level that we have closed at in all of 2022 so far. And I don't think Facebook earnings are going to save the day, and I don't think PayPal is going to either. I don't think Apple is going to, and I don't think Amazon is going to. So I think like the best earnings, the best companies that we were going to get, Microsoft and Google, are not going to save the day ultimately. The Nasdaq is signaling it's flat right now. Futures are pretty flat, up 0.01%. S&P 500 up 0.23%, and the Dow is up about 0.5%. So you're seeing a rush to safety right now. But you did get some weird headlines too. Take a look at some of these headlines. It's like, what? Like, what's going on? Do you want Trump to return to Twitter? Of course. Dude, I used to make so much money off Trump tweets. It was great when he was a president. You can go vote on that too if you guys want to. But it says China military follow U.S. destroyer transmitting Taiwan Strait. China military remains high alert to defend sovereignty. I don't know what this means, but it doesn't sound too good. I don't know. But yeah, IG Nico, my guy Nico. Did you see the Lucid news, bro? Lucid got some good news today. Luxury EV maker Lucid scores order from Saudi government for up to 100,000 vehicles. Saudi Arabia, a major investor in Lucid, has agreed to buy up to 100,000 Lucid EVs over the next 10 years. The deal is for at least 50,000 vehicles over that time, with Saudi Arabia's Ministry of Finance having an option to purchase up to 50,000 more. Deliveries will begin next year, the company said. Yep. Uh-huh. And that's what popped the stock in after hours too. Just so you know. Just so you know, I figured you would like that little news. I don't know if you've seen it or not. Yeah, the stock's up 6% after hours. I'm sure you've seen it. But yeah, good times for Lucid. Good times. Win Island, man, that's what I'm saying. Win Island. Are you still holding the PayPal call? What are your thoughts on that? That's a great question. Yes, I am holding the PayPal calls. I have a couple of them. Yeah, I got the two PayPal 110 calls, and then these are the ones that I had bought previously. A 110 May 20th call and a 130 May 20th call. I'm down like 26% on all of them. I'm down like $200. The way I kind of look at it is if I'm wrong on Apple, if I'm wrong on Facebook, if they don't come down in a dramatic way, then it's going to push the markets up. Like somehow if Facebook earnings are good, I think it's very unlikely that PayPal is bad. Or even if Facebook earnings are bad, then PayPal could do its own thing. PayPal's in a weird situation, and it's one of those things where like companies have to have incredible numbers and beat expectations by a long shot to really see those 10 to 20% rallies. But if they miss even a little bit on one part of their earnings, they can drop 10 to 20%. We've seen that with Netflix, and that's the likely trend, I think, the rest of this earnings season. But PayPal has butchered earnings like so many times in a row that their expectations are very low. Like there's not high expectations for PayPal at all. Like they usually fall on earnings. So actually gained 7% there. Yeah, they lost 6% right here. 10% right there. Last earnings they lost 25%. So they're at a very important level. I mean, they are lower than where they were during the lowest point of the crash in 2020. Or they're at least right there. So the business has made a lot of progress since then, right? Revenue 4 billion, 5 billion, 5 billion, 6 billion, 6.2, 7 billion in revenue. Like the business has done a lot. So I think it's one of those things where it's beaten down so much. Like this thing is beaten down much more than any of these other stocks, like Netflix, Facebook, obviously Apple, Google, Microsoft. Any of those don't even compare to the damage that has happened in PayPal. So I think if any of them were to surprise and really be able to move big, head back up to like 110, 120, it's going to be PayPal. But again, I could be wrong on it. I kind of look at it like a like a hedge kind of, I guess. If I'm wrong on those things and the markets do rally in a big way, I think PayPal would rally big as well. But yeah, I do hold them. Tomorrow is going to be very big. PayPal earnings. I'm just excited. Facebook and PayPal are going to be huge. One day, once before open, once during the day, and at after hours. AMC was doing pretty well until I checked after hours. Yeah, it was hard out there for a pimp today, man. We had Russia news, and I gotta talk quiet because my daughter's starting to wake up, and I don't want her to wake up right now. But I think she's waking up. Damn it. Russia, they announced today that they're going to cut off natural gas to Poland, Bulgaria, and it's rumored as well for Germany. And Germany is the largest country by GDP in all of Europe. So if that happens and prices go up even more, you're going to see a lot of instability in the markets. Like the markets would probably freak out because of that. That would be like our gas prices going to like $10. Yeah, markets would hate that. So I think that was also weighing on the markets today. State do you live in, bro? Yeah, Michigan. I live in Michigan. Tickle that like pickle. I agree. Yes, your face. Yes, I know, Nico. And I think that's gonna be a good one in the future, but I don't know how long it'll take. And if I were you, Nico, not financial advice, I would get some Polestar, get some Lucid too. Like you can go bigger in one of them, but I would have some other ones in case they're also big winners. I think Polestar has interesting prospects. They're like half the valuation of Lucid too, so and they delivered 29,000 vehicles in 2021, which I thought was pretty impressive. But obviously, they're not as expensive as Lucids. But I saw the first Rivian truck in Washington today. Seems like that's going to be a good investment as well. I seen a Rivian in Michigan. I was actually blown away. Like, I had to hit a UE in the middle of the road and everything. I had to catch up to it. It was a Rivian. Indeed, it's got that, like, long red, because it was at night, so I couldn't 100% tell until I, whipped the UE and got behind him. It's got, like, that line, that brake light that's just all the way across. And it's actually, I think it says a lot for Michigan, because you hardly see Teslas, you hardly see EV vehicles at all in Michigan. We're like a straight gas chugging state. We don't mess with EVs yet. And to see a Rivian, I don't know. I wanted to invest in the stock after. The valuation is a lot more compelling now, though. You like Sam's Day or next week? Same day or next week? You talking about like Amazon shipping? Oh, wait. Hey, Tyler, how are you? I heard you talking about meta puts, which I agree was looking at the 140 level in spot to crack major support and making all-time lows and buying the 85 puts. See, Facebook is, they just have a low... Jeez. They just have a low valuation. So it's one of those things where if like the markets expect Facebook to their business to get worse, which Snapchat earnings are not looking so good for Facebook. Snapchat actually grew users, and they did say that there was a 10-day blackout period after the Russian invasion where advertisers pulled their advertising campaign. So that obviously hit Facebook stock, but it kind of started to rebound off of that. And then that's likely why YouTube numbers missed so hard for Google. But Facebook is a much bigger company, so I think it could have a much bigger impact to Facebook. But overall, it's a low valuation company. And it is at a very key level if you look at the technicals. And I think it will, long story short, I think it will fall. But it's not going to take a lot to make it go up. Does that make sense? Like, if Facebook comes out and they actually grew users, like if Facebook did not lose users again, the stock is going up. I would almost guarantee that. Obviously, you can't guarantee anything in the markets, but that's the main key. Did Facebook lose users or did they gain users? That's the thing. If Facebook comes out and they lost like 5 million users, yeah, the stock's going sub 100. It's going to 100, right? If they grew users, say even 1 million, the stock's probably going either staying flat or going back to that 200 range, in my opinion. But I lean towards they lost users. But it's hard to tell. It's one of those things where like $200-$300 could pay out a lot, but you don't like risk the farm on it. Do you know what I'm saying? It's not something that I want to put like a shit ton of money into. But I think it could be good. Like if we're thinking about like PayPal for an example, PayPal, this is the 2020 crash, and this is obviously Facebook's chart. But for PayPal's chart, they are sitting at these lows of the 2020 crash. Where is it? Like, if you compare the two here, right? This is PayPal's chart. Lows of 2020, $82. They're currently sitting at $83, almost $84. Facebook, the low was $137, and they're sitting at, in this moving after hours, I believe it's like $177 per share. So they could drop $40 per share, and it would be somewhat equivalent. It would be basically equivalent to the drop we've seen in PayPal. So, yeah, I think Facebook has a better chance of going down. I don't really see them adding users. If anything, they probably lost users from Russia. And that's a recipe for disaster for Facebook. And if we lose Facebook again, and then we lose Apple and Amazon, there's good and bad news. Good and bad news with that. The good news, well, let's say the bad news. The bad news is the markets are probably going to drop another 10, 12% from here. So your portfolio is going to get beat up even more. Good news is after that, you've hit the bottom. And then the markets will chill out for a while and probably go back up a bit. Because you can't see a bottom in the markets when there's still safety sections. And I actually had some people mad at me for the video earlier about the margin calls. So they were like, I think margin calls are happening too, but you provided no evidence of it. And I was just like, you can't. There's no evidence of margin calls. You can see it in the price action, right? When there's nothing that is doing good, when everything is down 3 to 10%, even the indexes, that's telling you that things are not so good that you're seeing margin calls. That's a full capitulation. That's a full just sell it all. Thank you for the thoughts on PayPal. Yeah, I think if you compare it to like some of its peers, some of these stocks that have gotten beaten down, PayPal to fall like how much lower is it gonna go? I hate to say that because it always seems to go lower after I say that, but if this stock dropped 10%, it would drop another $8. I mean, you'd push it back down to like 72. You're going to be well under the crash of 2020 lows, whereas the business has grown revenue like 30% in that time. The problem with PayPal, though, on a fundamental level, and this is what is going to be the most important thing for PayPal earnings, is the margins. PayPal's margins have been going down, and I believe it's something to do with eBay, the transition between eBay and PayPal, but from what I heard, that's going to be cleared up in Q2. So not this quarter, but next quarter. So that's going to be interesting what they say. But PayPal has grown revenue a lot over the years. Like, this is a growth company, but their margins are terrible. Like 2019 to 2020, great margins, right? 17.77 billion in revenue in 2019, 2.46 billion in profits. Great. 2020, 21.45 billion in revenue and 4.2 billion in profits. Then you go to 2021 and it's like, what the hell happened? They grew revenue by about $4 billion, but they lost $200 million comparatively to 2020 profits. Like, they made less money in 2021, but they had $4 billion of more revenue. So the markets did not care about that earlier, like 2021. At the time it was great. The stock ran up like crazy, but once people started to care about margins and profits more, they all of a sudden start to care. But it is a very, very fair valuation. Even Yahoo Finance says it's undervalued. So yeah, I think the odds of PayPal falling again dramatically is a lot less than something like Facebook. So I'm pretty comfortable with that trade, and I think it's one of those that is so underrated that it could pay out really big. Like, if PayPal can grow margins and has good numbers, the stock's probably going back to 120. This 120 range. And then those contracts would be like $1,000 a piece. I don't think Amazon reports bad earnings here. See, the only thing that, last earnings, Amazon did not report great earnings. They they had good AWS earnings, right? So AWS saved Amazon last quarter, and that's what the markets care about because that's seen as like the main source of revenue. Now, I'm not too familiar with AWS. I believe it's like an ad supporting program, right? Correct me if I'm wrong, but it's obviously digital and something to do with ads. That's all. Like I don't know what AWS is. Um, I'm not that guy that studies that or anything. But um, Russia and Ukraine probably did not help that. But on the side of their other business, they came out a month ago and said they cannot handle this inflation pressure. So they did up prices like a 5% surcharge for like gas to deliver these things, products. So I'm curious, and the markets are curious, investors, how that is going to affect their margins, their profitability, and ultimately their revenue too. But that's really why I'm concerned about Amazon. Like Microsoft and Google, like these were the companies that were going to do the best. Their software trades, their advertisement trades, like the only thing Microsoft like truly sells in stores, correct me if I'm wrong, is like computers, right? With like Microsoft, all that. Like if you get a computer, it's probably got Microsoft on it. In that like Xbox. Everything else is like cloud from like the typical Microsoft business you'd think of that drives most of their revenue is pretty much cloud based. Google, that's all cloud based from as far as I know. Certain sectors might be, subsidiaries that, are physical products, but I'm unaware of them, and the markets don't look at them as like a hardware trade. They're software trades, and if any of those out of any of the big stocks, the software trades that really don't have that durable goods cost inflation to deal with should have done the best, right? Like Apple has to contend with the China situation. Their like parts for phones, everything's gotten more expensive. Like literally everything. Like glass has gotten more expensive. The metal you have on your phones, like more expensive. They're even talking about a sand shortage. Have you guys seen those CNBC videos talking about a sand shortage for like glass? It's crazy. But yeah, so I mean Amazon's in a precarious situation though. It hasn't really moved in the last 2 years. It's been pretty stagnant. Hurt by their shares in Rivian getting slammed. That's true. That's true. But it wouldn't surprise me to see Amazon report good. I think the Democrats made it better. Just walk everywhere. Basically. Banks are not doing well. No safety with billions on profits. Yeah, and that's a huge sign too. Like banks should be doing good right now, and they have not been. By the won and ruble. I mean, they've been weakening, which is really weird. So you're not seeing people buying the won or the yen, which they should be. Your DD fam, I think it's going to 2x. I got you in 1 second. Facebook puts at 135. Yeah, that could be interesting. James Valdez, did I miss any Facebook earnings talk? Yeah, we've been talking about Facebook. Like I feel like this whole live stream so far. I'm bearish on Ford. It seems like the supply chain issue keeps getting worse and worse. Yeah, GM they guided weird. Like they increased the range of guidance today. But they missed on their like volume deliveries. So if GM's missing, probably Ford's gonna miss too. But the thing that I want to know, and what the markets care about, is the EVs. So like the Ford F-150 Lightning, People want to know like how that's selling and what kind of cost that they're gonna have, because Tesla, one of my bearish theses for Tesla was the fact that the raw material cost to produce batteries and vehicles in general was up like 73%. Well, I didn't factor in ahead of time, which I didn't really lose money on the Tesla trade because I made them free anyways, heading into earnings. But what I really didn't factor in is the contract. So Tesla said that they have like long-term contracts, so like multi-year long contracts. So they have not been hit by these rising costs. It's when they go to renew their contracts that they will take a hit. Well, Tesla's been in the game for a long time. Elon has seen this coming for a long time. He's seen it coming for a long time. He's not a stupid dude. Whereas GM and Ford, they're newer to the EV game, and maybe they have had to renew some contracts in the 2022 so far, and that's where they could take a real big hit on margins. And Ford and GM already have stupid low margins anyways. Like, let's go ahead and look at like terrible margins. So I'm not bullish on these at all. Like, yeah, like look at Ford. Not right. Ford Industries. No, I want Ford. Ford Motor Company. Yeah. So, you could see like 2021 was a decent year for their margins. What they have like 12, 13, 14% margins in 2021. So that was not bad. But look at 2020. I mean, they lost 1.28 billion off of slightly less revenue. In 2019, they had way more revenue than 2021, but they only made $47 million in profits. 2018 they had more revenue, the highest year we've seen, right? 2018 was a great year in revenue. They did 160 billion in revenue, but they only made 3.68 billion dollars. Those are terrible margins. Like, how are you in business at that point? Like, you're not making any money. You're selling a lot, but you're not making anything. Yeah, 2021 set the bar high as far as margins are concerned, and that's what the markets care about. So Ford comes out and they have bad margins, and their costs have went up. Yeah, Ford's going to take a beating. Picked up some puts on Boeing. Yeah, that might not be a bad move. Big Blue. What is going on, brother? Banks are getting sweaty. Yeah, banks are sweating, that's for sure. Do you think spot bouncing off the 104 level after earnings or making all-time lows? And hit the likes for the man. I appreciate you, brother. Spotify, they were hit a lot because the subscription failures at Netflix. What? These headlines coming out right now are ridiculous, dude. What is happening? Dude. This is not the headline that I just seen. U.S. administration is concerned about possibility of Iran developing nuclear weapons in the next 2 weeks. Yikes. Jesus Christ. That can't be good. Blast heard in Russia's Belgorod near border with Ukraine. Yeah, that's an alarming headline. See, did it move the futures at all? Hell no, they are ripping. Futures were temporarily down for maintenance. Okay. I don't know. What does that mean, bro? Yeah, futures are ripping a little bit. But yes, Spotify, yeah, they were just hit with the subscription stuff, and they are also at their 2020. This is it, right? Spotify Tech. Is that really their name? I didn't think it was. Yeah, 4.11. Yeah, okay. Yeah, they're also at that crash of 2020 lows, so I think it could be good. I mean, anything that is like at the crash of 2020 lows, I mean, it should theoretically do decent. The thing with Spotify is the subscription. Like, if they lost subscribers, they're gonna do bad. If they gain subscribers, and I don't know what their forecast was. That depends on a lot. But like if they were expected to grow by like 5 million subscribers, I don't know what the number actually is. And they come in at like 3 million, oh yeah, the stock's probably getting clapped. But if they can at least meet that or exceed that, then I think it'll do well. 29, 30, 10% drop, 2% drop. I swore Spotify used to move more off earnings, but they sometimes don't move that much. I guess that one was decent. Oh yeah, last earnings they got destroyed too, like 16%. What do you call Melvin Capital at the bottom of the ocean? A good start. I feel that. Good old Melvin. Who names a hedge fund Melvin though? Melvin Capital. What's up, Melvin? How's that short doing today, Melvin? Everyone, go get your free like. Yes. Yes, I support that. I support the free likes. Yeah, you guys see this too? Robinhood cutting 9% of its full-time employees. That means customer service is going to get worse. What about Ater? Ater, alligator, Ater. I mean, I've had this level drawn up. As long as it stays above like 415, it looks decent. I don't know about super short term though. Like I know nothing about the business. I know it has a really high short interest still though. Ater's short interest last I checked was like 40%. That's brutal. Lots of bullish activity too in the options. 98% positive order value. Lots of calls coming through. Shorts, yeah, 42.36%. BRQ. BRQS Borks Technologies. Huh. short interest. I know nothing about it though. Which is a tough thing. Ater will be $20 by mid-2023. I have an average of $3.20 on Ater, like around 850 shares. Okay. Yeah, I don't know what they do, but I feel like Ater could be one of those that could go crazy. I mean, I don't know how this stock did this, but I don't remember ever seeing Ater during the hype in 2021 just going crazy. But it's got the potential to move. and a lot of the flow is restricted. CEI, oil. Yeah, I've heard a lot of people talk about CEI. Volatility is crazy on it. I see plus 10, then minus 5. Yeah, we're talking spot. Oh, Ater. Yeah, that's possible. I think I had the $10 calls that are clapped, like completely clapped. I lost a good $166. Ater $10 calls for this Friday. It was looking beautiful. I just did not get out. Wait, how did I lose that much money? I guess, yeah, 40 times 4 is 160. I think I was up on them too. I was just stupid and didn't take the profits when I had them. For a minute. Who knows? I'll take a rally though. This thing could go to 10 and I would not complain at all. Fundamentals are rapidly catching up. 2 new articles have AMC $35 to $60 fair value based on the past year's consistent growth. This inflation is what I predicted would catapult us. Yeah, fundamentals are pretty much the key to the stock market. Like, you can trade off of fear, greed, bad news, or good news for quite a long time. Yeah, like you've seen from 2020 to 2021, that was almost 2 years until like November-ish. Like a year and a half, 2 years. The markets didn't trade off of fundamentals. The markets didn't care about fundamentals. The Fed was your friend. It was your fail-proof backstop. They literally made money so cheap you were stupid to not take out a loan. But eventually everything reverts back to fundamentals. And the 2-year period, that was a pretty long time to disregard fundamentals across the board. And now they matter. And AMC is in the sector of the economy that is perceived to do very well, right? Does that make sense? Over the next year or two, as demand comes in for traveling, for going out to do things, like AMC is in that sector of the economy. So I think it's going to be good. And then everything that they have done in the past year, I think is going to be its tailwind now. And if you guys don't know what that means, it's literally like a tailwind pushing you ahead. Like, it's gonna drive the business, right? A headwind is obviously something that is pushing you back. So if you guys hear that and you don't know what a tailwind or a headwind means, you'll hear analysts talking about that quite often. But I think those are going to be big tailwinds for AMC that pushes the business ahead. All of the things that they've done, like once the popcorn business actually comes out, I think that could be a very real catalyst to start the MOAS, or the next acquisition that the AMC does, buying a stake in another company. That's going to also be a very good thing. Ater is pretty much Amazon, but with only 8 companies selling products. It's mostly kitchen appliances and household appliance companies. We will check it out. The leading consumer product platform. Is that a crypto sign? That's bullish. Shareholder perks program. We build, acquire, and partner with brands harnessing proprietary software and an agile supply chain to create top-selling consumer products. Ater is the world's most efficient consumer product platform. Here's how we develop products that customers love. We build products based on data and customer feedback. We acquire and scale emerging brands that customers love. We partner with companies to increase operational efficiency. The commerce operating system. Our brands span categories from home appliances and kitchen software to essential oils. Oh, I've seen this brand before, the Home brand. They definitely need a revamp to their website, though. Like, it looks good and all, but it's, like, not efficient for trying to buy something. They need it like an Amazon type layout. My opinion. I do. Yes, you can send me your newsletter. Keep me up to date, Ater. Thank you. I'll buy a new chair off Ater right now. So they're buying these companies then? Or they're just partnering with them? Because it looks like they're doing both. It says building brands from the ground up. 14 brands in our portfolio. Total SKUs 2K plus. 300 products launched. Because I like what they're doing, but they're buying companies with and taking on debt. That's not going to be good in this market environment, at least. But it's compelling. It's compelling. Check. Chew raw garlic if you get cold. Chemical release helps shorten sickness and colds, flu. Oh, that is good to know. Thank you, Ricardo. My portfolio is down, losing 80K. I decided to liquidate most of the stocks and move all liquidity to AMC. Do you think it's a good strategy? Of course, not financial advice, but would like to hear your opinion. I mean, I'm not really a huge fan of like selling out and taking losses unless there are companies that are not going to ever come back. Like if you know a company, let's say like Biogenomics or Skills, like if you had seen those companies coming and you've seen the change coming and you like if you had seen the change coming and you kind of caught the wave before it was too late, like some stocks are not coming back. Like Biogenomics is not coming back for a long time. Like Skills, I seen this thing today, it's $2. Like unless they show like crazy growth numbers, they're just not coming back. That ain't even. So if it was stocks like that, I would say it probably wasn't a bad thing to do. But at this point, I think just a lot of things are beaten down that shouldn't be this beaten down. But I think AMC is in the sector of the stock market you want to be in if you were to put money anywhere, like fresh capital. If you're not really in it for like the long term, like 5, 10, 15, 20 years, then you probably want to be in travel or leisure, like in AMC would be in that category. Lots of demand to go see movies. Heading into a good year for movies, right? There's a lot of movies that are coming out, and their theaters are probably going to do very well. So I don't think it's a necessarily bad move, but just for full transparency, like I don't have all my portfolio in AMC, and I've been very clear about that. I've been investing for the last 5 years though, so I've built up positions that I just don't want to sell. But I do put a lot of money into AMC. I did put a lot of money into AMC too, and I've never sold it, and I won't ever sell it. So it's one of those things. Like if AMC had went back down to 13 or 12 or 10 if the markets got bad, or under 10 if the markets fully just took a dump. Like the markets fall 25% from here, are you going to panic and sell out at the bottom? That's the question. But I mean, it's a tough one, but I think you'd be fine. AMC's been showing a lot of strength. Like I think I was gonna say this earlier, but if you look at the S&P and where it's like where it's at right now, like I said earlier, we closed at the lowest point that we have in 2021, 2022 so far, and AMC has not closed at the lowest point of the new year, right? We're still considerably off of that $13, close that we seen back here. We're still at 15. So to put that into comparison, AMC is holding up a lot better than even the S&P 500 at this stage. So I think there is some more big money that is going into it. Is selling calls good, buddy? I do. I sell a lot of covered calls. I have not recently because all of mine are starting to expire. Yeah, but if you have long-term positions, selling covered calls is never going to hurt you. Like if you have average cost on, call it AMC at $20, and you sell a $25 covered call for a month from now, I mean, the worst case scenario is you have to sell your stock for a profit, and that's a pretty good worst case scenario. But like in AMC's case, if the MOS like were to happen and you like could confirm it, you don't want to. I personally wouldn't want to hold that covered call. I would probably close it and hopefully not take a big loss on it and reopen one at the peak of the momentum. What you think about SPY as well? Oh, you said any good puts? I mean, I have Apple puts, I have Facebook puts, couple other ones possibly here and there, but that's really what I'm betting on. I think Apple and Facebook are really on the chopping block here. Apple puts, yeah, holder of the shares got it. Apple puts. What you think about SPY as well? Yeah, SPY, it's one of those things where if Apple and Facebook come down, or Amazon too, it's gonna bring down the S&P. So even if you didn't want to necessarily trade Apple, and just trade the S&P, you got to be mindful of Apple, because if Apple shoots up on earnings, the S&P is gonna shoot up in a dramatic way. If Apple goes down in a dramatic way, the S&P is gonna go down in a dramatic way. So there could be some decent ways to hedge there. Maybe getting Apple puts, maybe some SPY calls. What I would possibly do, and not financial advice. I have not done this, and I really didn't think about doing this until now, but you could do like a short straddle on a sounds weird, on like Apple and the SPY. Like if you were bearish on Apple, you could do like shorter term puts and then do longer term calls on the S&P, because the puts on Apple, they're not that expensive. The markets don't expect Apple to really come down in a dramatic way. Like you can get out of the money Apple puts for pretty cheap. Like if Apple were to pull a Netflix or Facebook, which it's highly unlikely to do, that's why they're so cheap. I mean, you'd get paid out big. Like, they're not expensive. An at-the-money put is 4% to break even. So, like, if you went out to, like, a May 6th, like a 140 put is 11% to break even. This thing could go to 120 if earnings were bad. Like, really bad. But, yeah, you could do like a shorter term Apple put and then like a longer dated SPY call, because you're gonna lose money on the SPY call if Apple goes down. But I think after Apple, if Amazon goes down, if these large tech stocks go down, that's where you hit a bottom, and that's where you could see a rally back in the S&P 500, and that's actually a pretty attractive strategy as of right now. And then if you're wrong on the Apple side, if Apple shoots up, you still got the S&P calls to kind of hedge it out a little bit. I don't know. That's not a bad. I don't think that's a bad way to play it. Oh, I'm not sold on Ater. That's why I ask. Well, I wouldn't like put just when you play like speculative trades like that, like an Ater, and you're using options, you're trying to make a big return, a small amount can do very well, and you don't want to risk a large amount in case things did not go well. But buying stocks not as risky, but it still can be. Hold on, let me see. Yeah, I do want to look. I seen your comment earlier, and I knew I was gonna look at it, Cameron Carey, but I got sidetracked. But I am gonna take a look at that and kind of give my opinion. Is that Costco? COSM. What's that? Is that Costco? I don't know what that ticker is, but yeah, so the only thing with Ater is, yeah, they do lose a lot of money. So I don't know. Yeah, that's a tough one. They do lose a lot. Probably the acquisitions. I don't know. You'd have to do more digging into it, but me personally, if I were going long an Ater, I would probably I'd probably get some now, probably get some later. It's only a $329 million market cap, so it's not like super high anyways, but still, maybe get some option exposure for the leverage if things do go crazy. But when I say like I don't know what size your portfolio is, but mine's like 38K right now. My Robin the Hood one. Other portfolios are different sizes, but like if I were to do an Ater play with my size portfolio, I put $160 into it, and that's like what I felt comfortable putting into it. Like if I lost it, fine. If I made a lot, fine. That's the way that I would look on it. But COSM. What is COSM? Cosmos. That sounds like a drink. Cosmos. Is that a drink? I think that's an alcoholic beverage. I don't know how I feel about trading alcoholic beverage stocks, but I feel you, bro. I feel you. If this is the stock you're talking about, it's definitely running, and I have no idea why it's running. But given the market environment that we're going to see, If you're up 500%, I would make it free. You know, if you spent $500 on a trade, I would sell out enough to get my $500 back. Looks like it has a very low short interest from what I can see. I think it's going $2 plus. It is up. It is at like $2, ain't it? Well, it's at $1.99 right now. So it's pretty much at $2. No AMC FOMO today, even at 15s. Yeah, FOMO only happens when there's like a reason to, you know. No options, only shares on. Yeah. If it was me on costs, cost M, depending on how much you put into it. Like if you put $100 into it and you're up 500%, what are you up $400? Sell 25% of it, get your initial investment back, and let the rest sit free. And that's what I did with Mullen, and I still haven't sold Mullen. But I got my money back with options because I sold options instead. So I've still have my 500 shares. I've made $410 back. I spent 500 times 70 on the position. I only what I spend like $350 on that. So that's always the best thing to do with shares or with options. Just get your money back when you have a big gain. Yeah, so I spent $350 on this whole Mullen position, and I've already collected $410 back by selling the $5 July calls, and I still got $75 in those calls. So all in all, I'm gonna make like $200 on this covered call, these covered calls that I sold, and I get to keep my 500 shares. In case a year from now this thing goes to $20, I'll still have my 500 shares. That's the way that I look at a lot of these cheaper stocks. I think you went over it earlier, but why Lucid go up in after hours today? Yeah, the luxury EV maker Lucid scores order from Saudi government for up to 100,000 vehicles. Saudi Arabia, major investor in Lucid, has agreed to buy up to 100,000 Lucid EVs over the next 10 years. The deal is for at least 50,000 vehicles over that time, with Saudi Arabia's Ministry of Finance having an option to purchase up to 50,000 more. Deliveries will begin next year, the company said. Yeah, that's what popped it over 5%. Saudi Arabia's initial orders will be modest, between 1,000 and 2,000 vehicles per year starting in 2023. Deliveries to the oil-rich kingdom will increase to between 4,000 and 7,000 per year starting in 2025. If you've been buying 5 ounces of silver a week for 20 years, you have 2,600 ounces worth of silver worth over $250,000 now. Yeah, that's crazy. Some people do, like right now, there is some people that do that. Not for 20 years, but shoot, if you had been buying gold for the last 20 years, I believe you'd have more than that. Because gold is like 10x since like 20 years. I don't think silver is 10x. Maybe it has. CNBC's chart only goes back to 2005. Yeah, futures look good, but don't let them fool you. Don't let them fool you. The sentiment is not great right now. And it's probably not going to be great on Wednesday for, tomorrow for like Facebook, PayPal earnings is probably going to be very negative, and then Facebook's probably going to kill the markets again. AMC's supposed to squeeze in the stratosphere, but nobody's buying it. Yeah, people just people don't really stick with something. Like a lot of people say, they buy and hold, and some people do, right? I've never sold, but a lot of people are just traders, and they're just in and out. $10K into 40. I buy AMC all day. I buy the dip, then I buy the dip after that dip, and the next dip. Let's go. You can make a song out of that. I buy the dip, then the dip after the dip, and then the next dip. 10,000 into 47K. All profits AMC and GME after May 11th. Let's SPY tanks below 400. Yeah, I would just be careful with a gain like that. I would at least get my me personally, if I had a gain like that, I would probably sell out first thing in the morning. But I mean, don't take my advice for it, because I usually sell out early of things, and I'm usually very early to macro trends. So I'm usually early, and I usually am coming with that. I'm early to make the money, and I'm early to get out of the money. I'm early to take the profits. But with a gain like that, I mean, that's plenty. Given this market environment, like, I don't know what the catalyst is for that, but unless it's like a buyout or it's huge fundamentally for the business, like instantly going to drive like more revenue or whatever the catalyst is, like it has to be like instant, like a buyout, or the stock's gonna come down due to market sentiment. So I would personally just get out of it. If I had 10 grand and a 47K, you already hit the bag. There's no need to stick around and see what happens next. 55 an ounce in 1971. Jeez. Okay, yeah. Then silver was better, huh? Or no, I think gold was still better then. No, never mind. Never. How much is silver? $55 an ounce. Yeah, it's only 23 an ounce. Yeah, so gold would have made you more then, I believe. Yeah. For sure. For sure. Lucid went up. My put's about to get clapped. Well, I don't know if it'll hold up. With the markets the way it is. I don't really think this is like a huge sign of what we're going to see tomorrow. The futures were up a couple days ago like 1%, and then they sold off the whole day. And then we closed down like 2% on the day. So I don't, even last night the futures were up decent, and then we just sold it all off. Like, I don't think any of these rallies are going to hold until we get all of earnings out of the way, at least this week. Once we get to Friday and we can see like what happened, with Apple, how the markets open and how the markets take it, like by midday, by end of the day on Friday, that's where you can kind of see like, we're done. It's not that bad. The markets are either going to be in the floor at that point, or they're going to be stable or heading higher. And that's going to be my confirmation of we got through earnings, it was good, or it was really bad. Another guy from Diamond Handy, but it's getting tough, I gotta say. We're getting closer, my friend. At least I personally think so. The conditions for margin calls to turn into forced liquidations is here. It's a dramatic shift from what we seen in 2021 in June, or even in January with AMC the first and second time around, comparatively to now, like we're not even in the same ballpark here. Like it's like comparing the Detroit Lions to the Patriots. Like it's just not even in the same realm. And I like the Lions. You know, I live in Michigan, but I mean, come on now. They suck. They suck. Like Stafford leaves first year, goes to the Super Bowl and wins it. I don't know. I think that was a good comparison. I think that was an accurate comparison. Oh, $1.55 an ounce. Oh, jeez. Oh yeah, that was pretty good then. Dip on the dip. Yep. See how the market works and running up and down, just a rug pull both directions. You have to be quick on everything, but once you find a banger, only hold, share, sell options quick, 1 day hold. Pretty much. Yeah. Pretty much. Yeah, what they're doing right now in the markets, and I hope you guys realize this. If you don't, then you're about to learn something new. But what they're doing, right? And it's very obvious to see. Like with these bounces in here, you know, this bounce, this slight bounce, that bounce, this bounce, that one, you know, multiple bounces throughout the day just to sell off lower. It's not people that are buying the markets. It's what they're doing is the market makers are coming in, they'll sell off the markets, so everybody goes ahead and buys puts, right? Shorts the markets, and then they'll pop the markets. Then they'll start to flood the markets with buys, right? Start to flood the markets with buys, and then everybody gets out of those shorts, and then they dump the stock again, basically buying the rip and then shorting the fall, right? And then you go to a new low, and then they'll repeat this process over and over again. Like these rips are not actual people buying. Like some people obviously are, but it's not like everybody's like, wow, this is the reversal. It's happening. Like no, this is all of these rips are market makers providing liquidity to one direction or the other a little bit too much. Can't even think about anything that could help. Doctor Strange box office earnings. Yeah, I think anything like that could be a substantial catalyst right now. You know, popcorn could be. I mean, it wouldn't surprise me something with Twitter, a partnership or something. That would be cool. That'd be cool for all Twitter users. That, yeah, I don't know. They could do something cool with that. You can now pay for AMC tickets on Twitter using Dogecoin. I don't know. There could be a lot of potential different catalysts. Sentiment over since these earnings. Throw some money at quick day trade. Yeah, Redbox. I've been hearing a lot about that. You listen to bass or bass? Bass or bass? Bass or what? I don't know. Everybody likes their bass. Fucking, oh man. No, I live in a town where we grow sugar. So it's like it's kind of chill. But I used to live in the ghetto where everybody had bass. Yeah. Dubstep. Yeah. But in Michigan and like Flint, it's trap music. So it's like, you know, killing, robbing, all that kind of stuff. I'm more of like a country guy. I like stock market rap too. But it's not like about killing or drug dealing. It's about like hitting option trades. Yeah, it was good. It's actually it's Uncle Answers on YouTube. Type it in. Type in Uncle Answers, and it's all stock market rap. And he's good too. He's good. Every single wage increase since 1971 has been destroyed by inflation. It's how they keep the I mean, raising wages is like a form of inflation. Like it should lead to inflation. It's essentially devaluing the currency. You know, because nothing can be good forever. Country, huh? Uncle Answers, huh? Okay. Yeah, Uncle Answers. Grateful Dead country. It's good. It's good. But all right, I'm gonna get my happy ass out of here. Let's see what futures are looking like real quick. And Russell 2000 looks like it's up 0.18%. Nasdaq up 0.30%. S&P 500 up 0.5%. Dow up 0.70%. I wouldn't be convinced of a rally tomorrow just based off the futures. You'll really have to see like what the first half an hour brings us, and I think that'll tell a whole lot. Yeah, watch out for those Russia headlines as well. That's what really affected the markets to a certain extent today. Was Russia. Yeah, the Discord is calling. Yes. Essentially Russia cutting off natural gas to Europe is definitely a sign of escalation and making the situation worse, and potentially leading them into a recession a whole hell of a lot faster. So yeah, thank you guys for tuning in. Appreciate all of your wonderful souls. Hit the like button, subscribe to the channel on your way out. If you guys want to come trade with us, join the Discord that wants my attention, as Big Blue CNC says. Link down below in the description or in the pinned comment of the last video. So thank all of you guys.